January is the month where a lot of people feel like their insurance stopped working. You go in for something that was cheap a few weeks ago, and suddenly the bill looks closer to full price. By the end of this video, you'll be able to look at your plan and predict what you'll owe on the next visit using 3 numbers, plus one screen that most people ignore. This video is for education only. It is not medical, insurance, or financial advice. Picture this. In late December, you go to urgent care, you pay a small amount, and you move on. In early January, you go back for a follow-up, and you get a bill for a few $100s. Same clinic, same insurance card. It feels personal. Most of the time, it's not an error, it's the calendar. A lot of plans reset the deductible at the start of the plan year. That means your you pay first meter goes back to 0, even if you hit it last year. Here's the clean way to think about it. There are 3 big moving parts that decide what you owe. 1 is the deductible, 2 is coinsurance, 3 is the out-of-pocket maximum. The deductible is the amount you pay before the plan starts sharing the cost for many services. Not all services, but many. Coinsurance is the split after the deductible, like you pay 20% and the plan pays 80% until you hit the out-of-pocket maximum. And the out-of-pocket maximum is the real ceiling for the year on what you pay for covered in-network care, not counting premiums. Now let's make that concrete with one realistic example, because the math is where people get blindsided. Say your plan has a $1,500 deductible. After that, you pay 20% coinsurance for most services, and your out-of-pocket maximum is $4,500. In December, you had a year, a couple visits, maybe a test, maybe a prescription. Over time, I already paid your $1,500 deductible. So by late December, when you walk into urgent care, you're mostly in the coinsurance phase. Your share is smaller because you already paid your way into coverage for the year. Then January 1st hits. Your deductible resets to $0. So the first time you use care that is subject to the deductible, you're back in the you pay first phase. That's why the same type of visit can feel wildly different across the year. But there's a second piece that matters just as much as the deductible, and this is the part people rarely understand. The price you owe is usually based on the allowed amount, not the billed amount. A clinic might bill $900 for a service. Your plan might have a negotiated allowed amount of $300. If you're early in the year and that service is subject to the deductible, you might owe most or all of that, $300. That still feels painful, but it is not the same as owing $900. So the first question is not, why is it expensive? The first question is, what price is the plan using? You can see that on one document, and it's not the bill you get from the clinic. It's the explanation of benefits from your insurer. That document shows 4 numbers that tell the truth: what was billed, what was allowed, what the plan paid, and what you owe. If you only look at the clinic bill, you're missing the middle step where the negotiated price shows up. Now back to our example. You go in early January and the allowed amount is $300. You have not met your deductible yet, so you pay $300 and your deductible progress becomes $300 out of $1,500. A few weeks later, you have a lab test with an allowed amount of $700. Now your deductible progress becomes $1,000 out of $1,500. Then later, you have imaging with an allowed amount of $800. That pushes you past the deductible. You pay the remaining $500 to finish it, and now you're in coinsurance for the rest. So the reset is not January is expensive forever. It's January is expensive until your deductible is met. That timing matters for your budget because it turns health costs into a front-loaded cash flow shock. This is why people feel squeezed even if the overall economy looks calmer. It's not just prices, it's when you're forced to pay them. Here's the most common mistake. People assume their copay is the price for everything. A copay is a fixed amount for certain visits or prescriptions. But many plans treat imaging, labs, procedures, and sometimes even specialist visits as deductible first. The plan details decide, not the vibe of the appointment. So if you walk into January expecting a $30 copay and it turns into $300 due, it's usually because that service is not a copay service on your plan. There's also a counterpoint that can soften this. Many plans cover preventive care differently. A routine preventive visit can be covered at no cost to you, even before the deductible, if it's coded and billed as preventive and it's in-network. So the practical way to frame it is this. You're not asking, is insurance working? You're asking, which bucket is this service in on my plan and where am I on the deductible clock? Once you see it that way, you can stop guessing and start verifying. And there are 3 signals that tell you, fast, whether a bill is normal timing, a coding issue, or a network surprise. The first signal is your deductible tracker inside your insurer portal. Most insurers show a simple progress bar. It will say something like, deductible met, and a dollar amount. If that bar is near 0 in January and you just had a service that is deductible first, a bigger bill is expected. If the bar is already moving but the bill you got is still charging you the full allowed amount, that's when you start thinking about timing. Claims can take a week or 2 to process, so your portal might lag behind the visit date. In our example, after that first $300 urgent care claim posts, your tracker should show $300 toward the $500. If it still shows $0 2 weeks later, that's a clue the claim is delayed, or it hasn't been sent, or it was denied and never applied. One more nuance that matters for families. Some plans have a family deductible, and some have both an individual deductible and a family deductible. That can make it feel like you met it and then you didn't, because one person's spending might not satisfy the family threshold. So, when you look at the tracker, check whether it is showing individual or family, and whether you're looking at the right person. That one detail can explain a lot of January confusion. The second signal is the allowed amount on the explanation of benefits. The bill from the clinic shows what they charged. The explanation of benefits shows what your plan recognizes as the price, and those can be very different numbers. So, find the allowed amount, then look at the you owe amount right next to it. If the allowed amount is much lower than the billed amount, your plan discount is working, even if you are paying more because the deductible reset. If the allowed amount is high and close to the billed amount, that often points to a network or coverage issue, not just a deductible reset. In our example, the clinic bills $900s, the allowed amount is $300s, and you owe $300 because you are early in the plan year. That is the normal January pattern. The third signal is network status. In-network means your plan has negotiated rates and rules with that provider. Out-of-network means the pricing rules change, and you can be billed above the allowed amount. You can usually confirm network status in the insurer directory, and many explanation of benefits documents will also label it. If the explanation of benefits says out-of-network, the calendar is not the only reason the bill grew. The network is. Now, what can you do with this without turning it into advice? If a January bill feels wrong, one option is a quick verification loop before you pay. Check the deductible tracker. Check the allowed amount on the explanation of benefits. Confirm the provider was in network on the date of service. If you expected a preventive visit to be covered, another option is asking whether it was billed as preventive or diagnostic. That coding choice can change whether the deductible applies. If the bill is correct but the timing hurts, a common approach is to ask for a payment plan. You are solving cash flow, not arguing with the rules. Here's a simple decision rule that helps people choose a setting when they are sick. If it is urgent but not life-threatening, many plans price an in-network urgent care or a virtual visit differently than an emergency room. The easiest way to avoid a surprise is to check the copay or deductible rules for those settings before you go, if you can. And if the care is not urgent and you have flexibility, the calendar matters. In our example, an $800 allowed amount imaging service in early January might be close to $800 until the deductible is met. The same service later in the year might be closer to 20% of the allowed amount if you are already in coinsurance. Not always, but often enough that it is worth understanding. Some people also use a health savings account or a flexible spending account to cover deductible costs. The upside is tax treatment. The practical downside is you still need the money set aside. Now, let's recap in plain English. January feels expensive because the deductible often resets, and a lot of services are deductible first. Your real price is the allowed amount on the explanation of benefits, and the biggest "this can't be right" bills usually come from network status, not the deductible. One more timing detail that saves headaches. The explanation of benefits often posts before the clinic bill arrives, and sometimes the clinic bill arrives before the insurer has finished processing. If the numbers do not match, it can be as simple as waiting for the claim to finalize, then asking the clinic to rebill against the final explanation of benefits. Here's the 2-minute checklist you can run the next time a bill feels off. Open your insurer portal and check your deductible tracker for the right person and the right plan year. Pull the explanation of benefits and compare billed amount to allowed amount to see the real price. Confirm the provider was in network on the date of service. If you expected preventive coverage, ask whether it was billed as preventive or diagnostic. If the bill is correct but painful, ask about a payment plan. If you have predictable early year care, plan for a front-loaded month so your budget does not get ambushed. If you can do those checks, you stop guessing, you start verifying. If this helped, subscribe to the Wealth Blueprint for more clear money breakdowns, and leave a comment with the next topic you want covered, or the one part of today's video you want explained even simpler.